The first company in our top three Canadian companies to never buy is Cineplex. With the rise of Netflix, Vudu, Bflix, and other entertainment platforms, Cineplex will find it harder and harder each year to compete. 4 years ago, the total subscribers of Netflix in Canada sits at 12.1 million. This year, in 2021, it grew to 17.2 million subscribers. We look at the net income, which is the bottom line. Here in 2017, it was at 70 million, and in 2018, it was at 77. So in 2019, you have to remember these are all in thousands. Therefore, what we do is we multiply 70763. So let's do that right now so that you know how to handle this. So that's 70763 times 1,000. 1, 2, 3. So that's 70,763,000. That's how you read these finances. You have to always read in how many decimals that would be there. So going back in 2017, that was 70 million, and then it went up to 77 million. Not so much really, and then just dropped in 2019. You have to remember in 2019, the lockdowns only happened in the last month of the year, and yet the company lost the net income of about 50 million there, and trailing 12 or the 2020 they just went down under, and in the last 12 months it is just even worse. With the net income this worse, you can only imagine that the earnings per share would be even worse. Therefore, you definitely see that here from 1.11 to 0.46 in 2019, and right now it is at minus 9.93. Therefore, the company or the shareholders of the company actually owe 0.993 every share. The free cash flow of the company is even worse. That's minus 21 million in 2017, somehow positive in the next 2 years, and then negative in the next 2 years until 2020. So this is the fundamentals of the company, and therefore, absolutely, this is a no buy. The company's debt is equivalent to more than 10 years of its earnings, and therefore makes it an absolutely no buy here. The second company of the top three Canadian stocks to never buy is Aurora Cannabis. Aurora Cannabis went public in Toronto Stock Exchange in July 2017, so that's only about 4 years today, and in New York Stock Exchange a year after, so that was in 2018. In essence, the company has only been public for 4 years, and 4 years of financial records available to the public is not much. It is not enough history there. Aurora has sold off assets and closed facilities to bring in and keep cash because the company is just hemorrhaging money. The company is bleeding, and therefore certainly not a buy. According to one article by NASDAQ, Aurora Cannabis officially is very far from generating a recurring profit, with wide supply bottlenecked in Ontario due to inadequate number of dispensaries being opened. Another problem that Aurora Cannabis is facing is that it is selling more and more of its stocks, and the more stocks are being sold to the stock market, the more diluted the shares of stocks is. Because the reason behind is that no bank would give Aurora Cannabis large loans because of its finances, and therefore the only means of consistently raising cash over the years has been to sell common stock, or these are the shares in the stock market, which then dilutes every share that is sold in the market. Another strategy that they were doing is that they sell assets to keep the company operating. We are now looking at the operating income of Aurora Cannabis from 2017 to 2021. So this essentially are the income that comes into the company through operations. So for the first quarter, for example, of 2017, the company had an operating income of 0.004 billion. But then, first quarter of 2018, they actually did not have any operating income. They lost money there. They bleed money there. And then let's look at first quarter of 2019. They even lost money there. Here, this graph here essentially shows you how much the money or how much money the company is losing. And come 2020, they just poof. Look at that number. Look at that graph. It's just going down. Essentially, what we want to see is for this graph to go the other way around and not go down. But here it's just going down here, and even worse now. It's absolutely worse. The company had been hemorrhaging money from 2017 until today. It is not going positive at all. The basic earnings per share of the company in 2020 is minus 25.51. This is the lowest, this is the worst earnings per share that I have seen so far. As long as the companies that I have looked at is concerned, the company is absolutely not having some good records here. And I'm going to save you some time here. We will not look further into this because this alone can definitely tell you this company is a no-go, it's a no-buy, save your money for the good ones. The third company on our list of top 3 Canadian stocks to never buy is BAYTEX Energy. BAYTEX Energy Corp is an oil and gas corporation based in Calgary, Alberta, and it operates in the US and in Canada. BAYTEX is overburdened by debt. Its debt is equivalent to more than 10 years of its earnings. This is the income statement of BAYTEX Energy Corp from 2011 until 2020. If you will look here, in 2011, they actually recorded a good revenue at 1.3 billion. But as the years go on, they are depleting this revenue. And in 2016, their revenue was only half of what they earned in 2011. And now they have in 2020, year ended December 31st, 2020, they recorded 605,965,000 worth of revenue. This is just not even half of what they earned or with amount of revenue they had in 2011, and that is about 10 years 11 years ago already, and they're just sitting half of what they earned in 2011. The net income of the company, if you will take the percentage of 220 million against 1.3 billion, this is so much expenses in between. Looking at the net income of the company from 2011 until 2020, in 2011, they recorded positive net income here, which is about between 10 and 14% of the revenue of the company. And then come 2014, they went on negative. 2015, they went on even further negative. 2016 is the same. They had a little bit of net income there in 2017. And then from 2018 until 2020, they just went on just spending spree here. Year ended 2020, they are indebted, or they spent 1,820,687,000 more than what they earned in 2020. This is just unreal how they managed to do that. Holy jeez, nobody can tell really. We should ask the CEO of this company. And then looking at the basic earnings per share is, of course, if the net income is depleting, you can only imagine that the EPS is also depleting and on negative territory. And it recorded a really low negative territory or negative earnings per share there in 2020. The lowest one was back in 2015. What's interesting here is that the revenue growth of the company year on year is actually, it's not growing, it's going backwards. It's almost minus 46%, and the profit margin is at 250 minus. So there is no profit margin for the company. This company is hemorrhaging, bleeding money. There is no growth in the revenue of the company. The company during its high time back in 2012 was selling at $57.64 a share, and it just took a nosedive there. The company is not turning in revenue. It's not turning in income. The earnings per share are negative. And right now it is selling at $2.18 a share. This is a nightmare. Thank you very much indeed for watching this video. I hope that you gained value in this video and in my channel as a whole. And if you did gain value in this video, please like, share, and subscribe. And I will certainly see you, hopefully, in my next video. Thank you very much.